options and futures traders. The markets may be wild, but you don't have to be. Join the Tradier Options Summit sponsored by SIBO on May 22nd. Let's tame the volatility with expert tips and strategies on navigating volatile markets in 2024. I will be hosting this full-day virtual online event. Learn from the best. Industry leaders will share their insights, trade ideas, and strategies on navigating these volatile times. Plus, get a sneak peek into Tradier Futures, which will be launching soon. Sign up now to be part of the action. Reserve your free spot by registering at the link below. If you're part of our email list, stay tuned for your invitation and link to register. Also, remember to visit hub.tradier.com. Join the Tradier Hub for free for all your market insights, trading ideas, market news, and daily live shows with industry experts covering all aspects of the financial world. See you on the 22nd at 10 a.m. Eastern Time, sharp.
All right.
I just want to pull one of my guitars off the wall there.
I know. I was going to say, a great little spot for the Tradier Summit. By the way, if Dillon and Ben here, co-founders and co-hosts with PeakBot and the Pulse Show here. But I know you're not used to seeing that spot there. If you're not familiar with the Tradier Summit and you haven't signed up yet, go do so. So much really great information. We actually participated in it last year. Go check it out. And a lot of really good things for you to be learning there. So we're back for another week of the Pulse here with the PeakBot team, and excited to get into it. We've been busy over here, Ben. We got some updates for our audience here today. Additionally, we will be taking a look at our watch list. We'll be taking a look at some stock charts. We'll, of course, take a look at my portfolio and make some changes there live for everyone. And we'll go from there. So, Ben, I can hand it to you. I guess actually quickly, just the banner on the screen below. If you have a question, ask us live, throw it in the comments. Otherwise, you can text us or call us at that number below anytime. You can also schedule a call on our calendars, okay? For anybody who's newer to the show, PeakBot's an automated options trading platform for the retail trader. We're integrated with brokers like Tradier and many more. Grab a time if you'd like a demo. Start automating your portfolio. Save time, eliminate emotion, the whole thing. Ben, I'll kick it to you and we can get into it.
Yeah, let's do it. I will start by pulling up my watch list on screen here. And if anybody took a look at the title of this show, yes, it was clickbait. But it's important to talk about, what trading naked means and why it's, maybe not always the best idea, and what we do at PeakBot to help prevent that. So we'll get to what it means to trade naked in just a second, but I wanted to review our watch list for this week for just a little bit. Again, this watch list is showing the top estimated premiums categorized by risk level and trend for the weekly wheel strategy. We've been talking about the wheel for over a year now, almost a year and a half now. And Dillon, that's what you and I pretty much exclusively traded in 2023 and saw some really great success doing that. So this watch list, whether you automate your trades with PeakBot or you just use this watch list to get better data on the market, use it how you will. It's a tool right now that's available to you for free, and get as much value out of it as you can. But essentially how you should be reading this list is we've got the company name and ticker, and we've got the current stock price. The stock price is updated roughly every 20 minutes or so. It's on a Google sheet, so whatever the Google Finance function feels is a good time to update, then it'll update. This trend and risk level, this is something that PeakBot determines based on the 67-day EMA and the size of the spread. We chose 67-day EMA because that's roughly 3 trading months. The max loss is the size of the spread, and that's the most, if you are trading spreads, that's the most you would ever lose on a particular strategy per spread that you're selling. Now, If you're not trading a spread and you're trading naked, which just means you're selling a cash secured put or a naked call, then your downside risk, you're exposed, which is why it's called trading naked. And that could lead to some danger later on, especially as we see big price swings on these companies. The cash needed column is the amount of cash you need in your account or margin in the case that you are assigned. So we are trading the wheel strategy. The wheel strategy sells puts. And then if those puts wind up in the money and that spread doesn't trigger the max loss, then you're going to get assigned shares. Not a bad thing. You should be trading companies that you want to own. And then once you get assigned those shares, then we go ahead and sell calls or call credit spreads on your behalf. PeakBot will do that automatically and collect premium that way. Now,
zoom in, Ben. Or
what's that?
Whenever. I was going to say zoom in whenever you have it pulled up again. That's all good.
Yep. Let's get that pulled back up. I feel like every week I'm just as zoomed as I can get, and then you always tell me to zoom in more.
Well, hey, look, I'm just trying to look out for the people.
No, I get it. So these two columns right here are what we are really interested in. What's that weekly put premium? And then what's the percentage premium on the cash needed to make the trade? So PDD, ticker PDD, is at the top of our list right now. I'm going to use FCX as a better example because a lot more people have $5,000 in their accounts than $13,000 in their accounts. So let's use FCX as our example here. Let's say we put that on PeakBot. We were going to let PeakBot automate trade for us today. This is just how the fundamentals of the strategy work. So Dillon will show you how to actually add a ticker to your PeakBot account in just a bit, so you can see the mechanics of that. So anyways, for FCX, if you were to enter a position right now, all this could change when the market opens, but you would essentially be risking about $200, and that $200 will only trigger 10% of the time, and we'll get into that in a second. You'll need $5,000 in cash in your account just in case at the end of the week you do get assigned shares and you have to buy 100 shares per contract. Now, in return for putting up that $5,000, you're going to earn back an estimated $23 in premium. Again, this will probably change when the market opens and PeakBot is executing trades on your behalf or placing trades on your behalf at around 11 a.m. to 12 p.m. Eastern time. So this could change between now and then. And taking this 23 and dividing that by 5,000, that's roughly a 0.5% gain that you would get on the week based on that premium into the cash needed in your account to actually execute the trade. So what the PeakBot strategy is actually going to do for you is it's going to sell the $50 strike for FCX. Is going to buy the $48 strike. So selling, that's how you collect your premium. That's how you collect your, we'll call it rent money, right? So you're essentially putting up collateral. You're going to earn some money back through that process. And then you're going to buy an insurance policy. So if we think about rent, we think about a rental property. We're going to want insurance on it just in case things go wrong. Now that $48 strike that we buy is our insurance policy. So we got to pay back a little bit of premium to get that insurance coverage. So when we net out what we get from the $50 strike and we pay back out for the $48 strike, our net premium, our net dollars in pocket is $23. And that's how we get to this amount over here. Now, we're selling the 30 delta and we're buying the 10 delta. Now, statistically, selling the 30 delta, if we let this ride through to expiration, that gives us a statistical probability of 70% that position is going to finish out of the money. Out of the money means we win. We win completely. There's no partial wins, partial losses, or complete losses. We get to take home that $23. No further consequences, no questions asked, just money in pocket. And then we buy the $10 strike. So before, when I mentioned this is only, your max loss is only going to happen about 10% of the time. Well, by buying the 10 delta, statistically, we're giving ourselves about a 10% chance that this will finish in the money, which means the stock price will have dropped below $48. And that would mean that our max loss would have triggered there. Our insurance policy would have kicked in, and we don't lose as much as we could have lose. Now, this is where there's a danger when you're not trading spreads and when you're trading quote unquote naked. If you did not have this $48 strike, and let's say the price of FCX, for whatever reason, let's say news came out that the company was going bankrupt, for example, right? That might cause a huge decrease in the stock price. And you don't have protection on the downside. So let's just say you only sold the 50 delta. Actually, we do have a watch list if you are trading naked. Some people still do. I think those people are crazy, but some people still do. So if we look at FCX, if you were to just trade naked here, you'd be earning about $32 instead of $23 in premium. Now, the downside is, let's say, like we said, FCX mentioned that they might be going bankrupt or something along those lines. If that stock price drops down to, let's even say, $40, well, the strike that we are going to buy at is $50. Now we're holding shares that are only worth $40. We just saw a $10 loss on the stock.
And scroll over. There's no secondary strike price to protect you. Like, again, there's no spread here. It's unhedged. So as Ben mentioned, the second it drops, well, not the second, but if it closes under 50 on Friday when the market, when the market closes and your contract expires, you're taking those shares regardless of what it drops to. As Ben said, if it's at 40, you got $1,000 unrealized loss in your account now, as opposed to just taking that $200 loss.
Yeah, I always go back to Upstart as an example, because that got a lot of people that were using PeakBot to automate, and they were trading naked. Upstart back in August of 23 reported earnings dropped about 60% that week that they reported earnings. A lot of it might have been just that day. Might have gotten worse over the course of the week, but regardless, huge losses in accounts. Had we been smarter and traded spreads, our losses would have been limited. And in this case of FCX, our loss is limited to $200. So it's a great insurance policy to have. I will pay for it week in and week out. I won't trade without it. Just, in my opinion, not a smart thing to do. Of course, this is not financial advice. Do your own due diligence, make your own trading decisions. The information on this watch list and on screen and what we talk about is just information to help you make your own decisions. But for me personally, I'll always trade with a hedge, just because you never know what's going to happen in the market. So that's the danger of trading naked. Dylan, do you want to add anything to that?
Yeah, I'll add a couple points. When we first got into automated options selling, the wheel strategy was the first strategy that we automated, and we didn't have a hedge on it. That we weren't trading spreads automatically through PeakBot. We were just doing it naked, cash secured puts and covered calls. And as Ben mentioned, when you're doing that, you want to be way more selective and honestly more conservative about your stock picks. If you're going to trade anything naked, again, not financial advice, but you better really love that stock. You got to be comfortable owning it, and you better feel good about it in the long run. Because quite honestly, the way we see it, well, the way I see it, is the only upside of trading it naked is collecting more premium. Because again, higher risk, higher reward. We've said it, taking that hedge and trading the spread, giving yourself essentially a stop loss. It's almost like playing blackjack. It's like when the dealer turns over an ace and they ask everybody at the table if you'd like insurance just in case this person flips over blackjack. Yeah, take it. Take the insurance. Pay back a little bit of what you're earning to protect yourself, right? So that's the concept. Once we introduced the spread through PeakBot last year, maybe halfway through 2023, we introduced it. People didn't look back. There are certain accounts, if you have a Tradier account and you have a cash account without margin or something, then you don't have the ability to trade spreads. Or if you don't have the proper options level in your broker account, you can't trade spreads. So it's not just given, but if you have the ability to protect yourself and hedge your bets and trade spreads, no reason not to from where we sit. So no, that's it, Ben. Great insight. Our bots preset, and I'll show this when I pull up my screen in a little bit. But when we go and look at my portfolio, you'll notice when you add a stock into PeakBot for the wheel, it's automatically hedging it. It's automatically assuming that you want to trade a spread. You can turn that off under advanced settings. We make you go and work for it. But both are available to you. One is way safer, the spread.
Yeah. No, good stuff. Good comments there. I think that about wraps it up for the watch list this week. Nothing major going on. We got some companies reporting earnings. Maybe the most notable is JD. JD's been hot on the watch list lately. JD is reporting this week. Actually, let me pull it up real quick. I'll just cover the few that are reporting earnings. We got Cisco reporting. We got JD. We got Alibaba. We got Baidu. I don't know how to pronounce that.
Baidu? Who knows?
Baidu. Ticker BIDU.
Yeah.
Go with that. We've got PBR, which I've been trading for some time, and then that about caps it off on the wheel watch list here. So, we had annual earnings about a month or two ago. We're looking at Q1 earnings for some companies now. So, we're about to head into that more quiet period between Q1 and Q2, where we don't have to worry about earnings as much and how that could affect our trades. So, Dillon, unless there's a particular company you want to pull up on a chart, I'd say let's go through your account and maybe we'll pull up on a chart whatever you're trading on your account. And while you get that pulled up, I will also just take a quick break and mention that over the weekend, if you were trading on TD Ameritrade, your account has transitioned to Schwab. This weekend was the final migration. And if you're anything like me or a bunch of people that I've talked to, you're not that big of a fan of Schwab. So if that is the case, go over to usepeakbot.com/Tradier. Maybe we could get that up on screen too, and create a Tradier account. I will say I've been trading almost all of my contracts on Tradier Pro, on my Tradier Pro account. I got to pay $10 a month, but I get commission-free options trades. It's fantastic. I save literally hundreds of dollars every month on my options trading. So if you're tired of Schwab, head over to usepeakbot.com/Tradier and create a Tradier account. So quick plug there, Dillon. Why don't you go ahead and hop into your account?
Excellent. And I put it in the chat. I'm just putting it in the Twitter chat here, the link. If you go to usepeakbot.com/Tradier, you'll actually save a couple bucks on some broker fees there. So usepeakbot.com/Tradier. And all right, so here's my portfolio. For anybody who's not familiar, this is the PeakBot app, okay? app.usepeakbot.com. Again, we have a 2-week free trial, no credit card needed. Just come on in, connect your broker. We're commercial developers. We work hand in hand with our broker partners, as you can see, live with Tradier here. So we make it super simple. Now, taking a look at my portfolio here, and I'll just zoom in so we can take a look at my current portfolio. So with the wheel strategy last week, and Ben, I'll ask you to pull up Alcoa Corp in a second. So ticker AA, I've been trading that for the last few weeks here. If we take a look at it on the watch list, let's find it. Here it is. So it's bullish moderate. So we like a bullish trend, just entering into the moderate risk here. $2 spread, which I like. I like keeping my risk relatively limited there, so it's not too wide of a spread. I would need $3,600 because my sold strike price is $36. I'm earning $30 in premium this week by selling a put credit spread, which is a 0.83% return.
Hey, Dillon, you know how you always ask me to zoom in? There we go.
We're the Zoom brothers.
A little bit more. Let's only have that left side of the screen there.
Dude, you're nuts. All right.
Much better.
So Alcoa Corp, again, for anybody who couldn't see it, it's trading at 37.12. I have a $2 spread. My strike prices are 36 and 34. I'm earning $30 in premium this week on that, which is a 0.83% return on my cash set aside. Now, you don't need this much cash to actually place the trade. You need $200 because that's really all you're risking. However, you're going to want this cash available just in case Friday, when the market closes and your contract expires, if you're in the money, you're going to be buying those shares. So have the cash available. Okay, we do have strategies that avoid assignment. The trend spread bot, our new iron condor strategy when these come out. But with the wheel, part of the strategy is getting assigned. So I'm going to keep rocking with Alcoa Corp. I was actually, if we take a look at my portfolio, was also trading JD. But as they are reporting earnings this week, I'm going to get rid of JD. I don't want to play into the earnings. That's on Wednesday or Thursday. So with JD, normally it pays around 0.5%, between 0.5% to 0.75% per week in premium. That's doubled, if not tripled, due to the earnings this week. We'll just call it 1.5%. Earning 1.5% in premium in a given week, that's, to me, outside of my comfort zone. This time last year, we might have said it was in my comfort zone, but I've learned my lessons. 1.48 is a little hot for me, because if we were to do the math, right, like 1.5% times 52 weeks, that's a 78% annualized return. If it were that easy, everybody would do it. This is just saying that this stock's volatility is going to be way higher this week, because we'll have to see how they report. Stock's probably either going to go like this or like this. I don't want to be there when we find out. So I'm going to remove JD from my PeakBot portfolio. I'm just going to click on the little checkbox here. I'll click edit status, and I'll get this option that pops up to either pause, play, or remove my ticker. I'm going to remove it, and it's gone. Okay. Now, just a quick reminder, and we're getting this pop-up built in very soon. When you remove a stock from your portfolio, it's, as you can see, JD is no longer. That does not mean that the shares have been sold if you own them. It does not mean that if you had an active contract open that it's closing it. None of that. All you're doing when removing a stock from your PeakBot portfolio is telling PeakBot, hey, don't make this trade next time the window is open. All right. So just keep that in mind. If you currently own shares or you're in an open contract, removing it isn't closing you out of your position. Okay. So now I need a stock to replace AA. So Ben, I was looking at.
You mean replace JD?
Sorry. Yes, I got to replace JD. I was looking at DraftKings here. So
okay. I trade DraftKings.
Yeah, so I'm gonna likely replace JD with DraftKings. It's a little bit more expensive, about $1,000 more if I was to be assigned. But I do have the cash available in my account. It's earning $26 in premium, which is a 0.62% return. Bullish moderate, which I still very much like. I got about $1.27 in breathing room before I get to my sold strike price of 42. So I like where that's at. I'm going to add it to my portfolio. I'm going to show you guys how easy that is to add. And then I'd love if, Ben, we can kick back over to the charts and look at both Alcoa Corp and DraftKings.
Yeah, let's start with.
So really quick, just to add the stock, start new automation, okay? Automated trading, specifically for options trading, I'll say it. You heard it here live. Nobody makes it easier than this, what you're about to see. There's not a platform out there that makes it this easy for you to automate a trade, set it and forget it, and have a stock trader in your pocket. So start new automation. I'm going to click select my bot. I'm going to select the wheel. I'll zoom in again. Hold on. I'm going to select the wheel. All right. Step 2, select my stocks, DKNG. Or I can type out DraftKings. Either way, it's going to pop up. Okay. I can add multiple stocks here if I have the cash and I had the interest in doing that right now, but I'm just going to add DraftKings. I'm going to set my spread, okay? One spread I like to sell. It's going to tell me that I need $4,100. On the watch list, it said 42, but stock prices are live fluctuating, so this could just be pulling the data. So have at least that much available. I mentioned earlier, this is automatically going to set a spread for you. So if I don't own the shares, it's selling a put credit spread for me. It's going to open today between 11 and 12 o'clock Eastern, set to expire this Friday, which is the 17th. If you wanted to, you can click on advanced settings and turn off the hedge, and it's just going to sell a traditional contract for you, a put or a call. But we're going to keep the hedge on. We're going to hit activate. This is a confirmation screen, and this stock is now going to be added in to my automated portfolio. DraftKings here, ready to rock and roll. And I'm excited to earn my premium and get going on DraftKings here this week. So, Ben, actually, anybody who's been watching, I've been trading trend spread as well. Got a lot of stocks on here. To be honest with you, most of my returns the last few weeks have been from trend spread. It's been kicking butt for us. It trades with the trend, okay, and it rolls contracts weekly. If you have questions on that, we'll throw the banner back up at the bottom of the screen. Text us, call us. If you want in on beta testing, let us know. We could be releasing this as early as Ben, I was going to say next week. Maybe it's another 2 or 3 weeks.
I'd say we'll shoot for June.
So we're shooting for June to get that bot released. Follow us on Twitter. We share my account balance, all the trades, the results. I'm up on a less than a 15K account. I'm up like $1,800 in the last 2 weeks, mostly on the back of the trend spread bot collecting premium and guessing the right way with contracts. So I'll shut up. Ben, let's take a look at some charts quick, AA and DraftKings, and then
Cool. All right, I'm going to pull up DraftKings here. Dillon, on your screen, I'm going to ask you what the strikes that we're selling are, if you could have the watch list on your screen just for that data.
Problem.
So we're looking at DraftKings here. What strike would we be selling on the put side for DraftKings this week? Right
now, our sold put strike would be 42.
All right, so if we're looking at the chart, that falls right around here. The last time we were at $42 was just about a week ago. Pre-market, we're trading up a bit. Again, these trades, what's that?
Nothing. I meant to put something. You keep rolling.
Oh, okay. By the way, if anybody has a question, I know we've got over 80 people on Twitter watching us, and then we've got a few more on YouTube watching us. If anybody has a question, feel free to ask. Last time we gave out free T-shirts. Maybe if somebody asks a really good question, we'll give out one free T-shirt this morning.
Yeah,
we'll see how that goes. Anyways, so DraftKings, the stock price, by selling the $42 strike, the stock price would have to drop down below this level and expire at the end of the week for us to get assigned this position. Now, Dillon, what was the bought strike?
40.
So in order for our max loss of, what was it, $200?
Yep.
Our max loss of $200 to trigger, not only would DraftKings have to drop below this line, but it would have to drop all the way below this line here, the $40 line. The last time we were there was all the way back in April, towards the end of April. So a couple of weeks ago, almost 3 weeks ago at this point. And it looks like we saw a nice bounce off of that $40 level. Now, I do see we did briefly dip down to the $39 level here. That's what the low is in this range of the 1 month chart that we're looking at. So, I mean, looking at the setup, just based on the spread, the $2 spread here from 42 to 40, and this shorter term trend of DraftKings looks like it's moving upwards. I'd say that's a pretty solid play if we're bullish on it. Now, we've got a technical analysis tool that's within our account on Tradier. If we go ahead and click more and we click on week here, because we want the weekly outlook, we see that there's 14 buy signals, 9 neutral, and 3 sell. Now, we are selling the 30 delta here. So we do have room for this stock price to even be a little bit neutral, even a little bit bearish if we drop down to the $42 level here. So I'd say, based on these indicators, there's 9 neutral and 14 buy. Add those up, that's 23 in our favor against 3 that are not in our favor. So overall, the profile for DKNG, DraftKings, is looking pretty solid if you're bullish on it this week, if you're on the put side, selling a put credit spread, or if you're crazy, selling a naked put, cash secured put. So overall, DraftKings not looking too bad. And then what do we want to look at? Alcoa Corp.
Alcoa Corp sold and bought put strikes are 36 is our sold strike. 34 is the bought strike.
All right, so 36 is right around here. So last time we were at that $36 level was 2 weeks ago, May 2nd-ish. And then what did you say was the next one?
34, $2 spread.
34. So another $2 spread, which is way down here. And again, we didn't see that since about 2 weeks ago, and then back again in April. And it looks like there's some pretty nice support on this $34 level. It's bounced off it twice in the last month. The low didn't drop much further down below than the $34 price level. Dropped down to $33.84. We can see there. So overall, and if we were going to see a loss, we would have to drop below 36. If we look at this short-term trend, we're trading between like 36.50, I'll give it, and like 37.50, $38. So I've been trading that trend up a little bit pre-market, which is nice to see. Again, if we look at this technical analysis tool, we'll look at the week. We got 12 buy signals, 10 neutral, 4 sell. So again, add up the neutral and the buy. Sorry, Dylan, you didn't get assigned shares of Alcoa, right? You're still on the put side?
Yep.
Yeah, so on the put side, we've got a score, we'll call it 22-4, because again, we can be neutral. The stock price could not move at all, and we would still take home all that premium, which is great. And it's one thing that I love about selling options is you could be a little bit wrong and still take home your full profit. And that's really good for traders like you and I, Dylan, because we're wrong. We happen to be wrong a lot. And in fact, if we look at the market, 90% of retail traders are wrong, and 90% of retail traders are failing. But you can increase your statistical chances of winning by selling options contracts.
I was wrong a lot. I was wrong a lot last year in 2023, and I still came home with a 32% return on my wheel strategy with my PeakBot account. So pays to be wrong when you're letting a strategy do it for you. Because again, you've heard us say these are probability-based strategies, right? The way we have our trades set up, we know over time that statistically speaking, we're going to hit our 70% win rate because we're selling the 30 delta. That's not up for debate. In fact, if you go to quickly, and then we'll sign off, I'll pull up my screen here. If you go to our website, use peakbot.com/results. Of course, my internet is a little slow, so hopefully it'll pull up here in just a second. But we share
the results page. I've got
it. Yeah, I got it up now. So if we take a look here, what we're showing is all of our wheel results. This goes back to what, Ben? End of Q3 last year?
End of Q3. So beginning of Q4 23.
Beginning of Q4 last year. So what we have here is the stock ticker, the current price of that ticker, the win rate traded through PeakBot. These are live results, okay? So we're showing you the average win rate, the average return from those winning trades, and how many weeks this ticker has been traded through PeakBot. So that means with Shopify here, that has been traded in 16 by one or many PeakBot traders in 16 different weeks.
Important. Well, zoom in a little bit, Dylan, but important to note too, and Dylan, you already said it, I just want to reemphasize that these are actual trades. This isn't simulation. This isn't back testing. This isn't paper trading. These are actual trades that have been automated by PeakBot on behalf of our traders. Now, there's a dark side to this list too, and Dylan will get down to the bottom of it. But what I like to look at on this list is, the number of weeks the ticker was traded. the more weeks that I see it's had success, the better I feel that that company in particular is to trade the wheel strategy on. I mean,
Like Beyond.
look at
This is
Beyond.
crazy. That's
27 weeks,
I
85%
hate that
win
stock.
rate.
I hate that stock. But you know what? You look at the data, look, it's a cheap stock, right? But it has won 85% of the time, 27 weeks, which is the most you're going to find on here, dating back to Q4. I mean, 26 weeks, 24, 27. So like, look at these four right here: Run, Riot, Teladoc, DraftKings, all identical win rates. Okay, traded 27 different times. 74% win rate, and you can see the average return here. This is the premium you're earning. Run was nuts. We were Run, and people are still trading it. Obviously, people are still trading it, and guess what? It's paying off for them. What this chart is not showing, okay? What this chart is not showing is the losses when you lose, okay? On a stock like Run and Riot and some of these other ones, we know those losses can be relatively significant, okay? Because these are very volatile stocks. So you might only be losing 25% of the time, but your losses are likely larger than, a 2%.
Yeah, most like, and Dylan, maybe what we can do is we can maybe figure out use the size of the spread. It's hard for us to track losses because a lot of the time what happens is when you're in an automation and you get assigned shares, a lot of the time people will manually sell out of their position and they just want to get back to the put side. So when that happens, that skews our data, and then it wouldn't be comparing apples to apples at that point. But yeah, we should get some data points up here to show that. But statistically, again, we're selling the 30 delta, so we would assume that most of these tickers are right around, right where SE is, right at that 70% win rate. Now, we're, again, factoring in the trend here, right? So that's, in theory, giving us a bit of an edge, hopefully giving us a little bit higher of a win rate, because we are trying to factor in what trend or what direction the stock is trending. So again, that could give us theoretically a higher win rate, but that doesn't always work out. I mean, scroll down this list here. You can see that there's plenty of tickers on this list that have fallen below that 70% win rate. American Airlines, popular stock, pretty modest in terms of number or gains week over week. I personally wouldn't consider that risky. Palantir, another. Well, I would consider Palantir a little more risky, but it does pay out a nice premium week over week. But hey, if you're comfortable owning the shares of that company, by all means. And then down below, you'll notice there's a section, if you want to scroll down there, for any stocks that have traded less than 5 weeks. We don't include it in the above portion just because, I mean, look at all those 100%ers like that. I don't feel comfortable advertising like WBD. I think, what is that? Warner Bros or something like that. Yeah. It was traded 1 week on PeakBot. So not fair to say that that has a 100% win rate. So we'll keep all of those other ones down below. But really the meat and potatoes is up top on this list. Seeing those stocks that have traded, over 20 weeks, like NVAX. NVAX is now, it's a little bit too low in dollar value. Look at Amazon though. Dylan, doesn't your dad trade Amazon?
Constantly.
Yeah.
Yeah. And look, it's making 0.5% a week, which compared to some other ones on here might be a little low, but 0.55% a week adds up at the end of the year, So let's do 0.55 times 52, 28.6%. That's an annualized return. 90%. That's incredible, right? There's some other big ones on here. I traded TJ Maxx for a while, Delta Airlines. I just can't get over it. Even AMC. I mean, God, maybe let's not keep that on screen too long. But AMC on paper, kicking butt for PeakBot traders. Those trades might, and we're getting into the weeds here pretty good now, but if you were going to go and trade AMC this week, it depends on what it's paying in premium. But the bot, just so you know, our logic, if it's going to pay under $10 or maybe even $5 in premium, the trade's not going to place. Just so you know, we have that written into our logic. It's not worth it, right? But Google, another one. I mean, Oracle. These are great win rates on really high quality stocks. So yeah, that's the results. Always here and available. Go to usepeakbot.com/results. Ben, I think that's it.
Yeah, I'll give a little teaser. PeakBot's automating trades with Tradier, our preferred brokerage, Tasty Trade, and Schwab. Schwab's giving us a lot of trouble, so don't sign up on Schwab. Create a Tradier account, use peakbot.com/Tradier. But no, what I want to say is if you don't have a brokerage account with those brokers and you still want to trade PeakBot's strategies, we are in the works of providing an alerts-based system. So you will get all the information sent to your phone or email in terms of how to trade these strategies manually, what strikes on what tickers to trade, what's at the top of the list, when to trade it, what to set your profit targets at, so on and so forth. You'll get all that information. We're currently in the process of building that out, but I know that there's a lot of people that follow PeakBot that are on other brokers that we're not integrated with, and they don't want to make a new brokerage account, which I totally get. If you were going to make one, though, you'd make it with Tradier. But for those that don't want to, you can still see these same results with our alert system that we're building out. And the beauty about it is, Dillon, a lot of alerts that are built on other platforms and for equities or crypto or futures or whatever, you pretty much have to be on your computer at the time the alert comes out to really capitalize on the trade. Now, maybe there's some give time, but what we're doing selling options, you've got a lot of time to actually get into a position. Like we'll let you know what strikes we would be getting in at a particular time, and you've basically got like an hour or 2 hours before things start to change even the slightest. So I'd like to think that our alerts are the most flexible in terms of like, hey, I can't get to my computer right now, but I can in 30 minutes. Results are going to be pretty close overall. So alerts to come, more information to come on that. If anybody's interested in joining the wait list for alerts, send us a text message. We should have the number floating on screen here. Shoot us an email. Anybody that's been around for a while, you know how to find us. If anything, go to usepeakbot.com, use that little chat feature at the bottom right of the screen. So
excellent. And Vincent, in the chat here, we're looking forward to having you on the alerts. Again, if you don't have a broker that we're currently integrated with, makes a lot of sense to do it. We believe that you will do it manually for X amount of time, and you'll realize at some point it's probably just easier to let the bot do it. But that's available to you as well. So really appreciate everybody. Again, we will be live here, same time, same place next week with Tradier and the Hub. We also go live a few other times during the week. If you want to catch us, check us out on our socials, use peakbot.com. We'll be going live tomorrow to take a deeper look at our results from last week, top 10 traded stocks, a couple other things, and we'll also be live on Friday to take a look at this week in review. So appreciate everyone. Thank you so much. And signing off as always, we'll see you at the peak. Thanks so much and take care, everybody. Good luck. Have a good one.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.